Explore smart investing strategies. Balance risk, leverage tools, and customize your portfolio.
So it's less risk in a way, and it takes a lot less time. It's a sensible approach for those who don't care about the art of investing. But for those who want to do the work and put together their own little ETF, well, you're going to want to start the process by using a stock screening tool of some kind. Now I'm going to use tradingview.com, which is a free service just for this example, but you might have one that you like and use already, and that's perfectly fine. One thing to note about stock screening tools is they're usually set up for finding companies that have similar financial statistics. So dividend percent, price to earnings ratio, that sort of a thing. You get a million options and filters. They're not really set up to screen by sector or by theme, which is what we ideally want. And another really annoying thing is that typically you cannot include stocks from around the world all at once in any given search. So here I can filter what I'm looking for by country, and then I'll get all the stocks sitting on those exchanges. So I'm going to use shipping, and I'm going to look at Norwegian stocks as our example. And I'm not doing this to recommend anything. My wife happens to be Norwegian. I've also spent a lot of time in Norway, and I know that they do a lot of shipping. So I'm just going to show you how we begin screening here. What we'll do is we'll firstly ignore the stuff we don't care about. So ratings, number of employees, trading volume, etc. None of that matters. I'm looking to make sure I do have columns which show me the financial health of the companies. And then I'm going to order this list of companies by market cap. This will mean we're dealing with the biggest fish in the pond, and thus those most likely to be where capital goes in the future. What you might want to do now is just pull up long-term charts of some of these companies to make sure they all follow the broad trend of being off from their previous highs and preferably traded sideways for ages. Generally speaking, the longer something has traded sideways, the more dramatic and aggressive a move to the upside will be.
Paid Substack subscribers get full access to the Asymmetric Investing course. To subscribe, visit Capitalist Exploits on Substack today and sign up.